Hi, everybody, and welcome to today's Mortgage Minute, where I am going to answer the question that's been troubling you for the last 5 years, and that is, what happened to the good faith estimate and the HUD-1? Any of you who have been in this business for at least 5 years probably remembers the good faith estimate and the HUD-1. Now, what are those? The good faith estimate was an attempt to upfront, when a person first applies for a loan, to give them an estimate, an idea of what the costs are going to be. And the HUD-1 at the end of the process is what outlines what the final or almost final costs are. What used to happen with the HUD-1 is that we were required to issue a HUD-1 at least 24 hours before closing, but often that didn't happen, and often the borrower did not see the final numbers until the day of or very close to the day of closing. And that really is not enough time for somebody to evaluate if they're getting what they thought they were getting. So in October of 2015, the good faith estimate was replaced by what we now know as the loan estimate, and the HUD-1 was replaced by what's now known as the closing disclosure, or CD, as some of you know it by. And, so what are some of the things that changed? Well, for one, the HUD-1, the closing disclosure now has to be issued 3 days before a closing. Okay, and the real reason for these documents being replaced is that now the loan estimate, which is your estimate of fees up front, matches the closing disclosure. You can compare what you were disclosed, the fees that you were disclosed up front, with what you finally get, because these two documents are comparable. So let's talk about the loan estimate. Loan estimate has to be issued. This is what replaced the good faith estimate. The loan estimate has to be issued no later than 3 days after a borrower initiates a loan application. On that loan estimate, we're going to show all of the costs of the transaction and the terms of the loan. Okay. Now, some of these things can change along the way because we don't always know the exact costs of everything. But some things cannot change along the way. Like, for instance, if there's a lender fee, the lender fee cannot increase from the initial loan estimate to the closing disclosure. Okay, but if there's an estimate of the property taxes that are going to be paid, something like that can be, although we do our best to estimate that, something like that can go up towards the end. So let's talk about what kind of fees are on this loan estimate. Essentially, any lender fees or points that are charged. Typically, we don't charge points, but we can. An appraisal, credit report, title insurance and fees, settlement fees, attorney fees, property tax escrows, homeowners insurance and homeowners insurance escrows, recording fees, among other fees, which maybe are less common. And also, a very important, what's on the loan estimate is it tells you what the cash to close is, so you know what you need to bring in. And that would include down payment and closing costs, minus any deposits that were given up front. And also the terms of the loan. What's my interest rate? How long is the loan? Is it fixed? Is there a prepayment penalty? Things like that. So it basically lays out the whole loan for you. When we get towards the end of the process, a closing disclosure is issued. The closing disclosure has to be issued at least 3 days before closing. And I know a lot of you agents already know this, and that's why we always try to get the CD out as early as possible, because there is always a 3-day business wait. And that does not include Sundays or holidays, but it does include Saturday. So, for example, if I need to close by Friday, that closing disclosure needs to go out by Tuesday. If the closing disclosure goes out Thursday, then we count Friday, Saturday, can't close till Monday. So we try to always work backwards to make sure that that CD is issued at least 3 days before the closing date. And really, the biggest benefit of the loan estimate and the closing disclosure is that they are comparable to each other. And I go through these documents with people all the time. When they get their initial disclosure package right after they apply for the loan, there are tons of documents they need to sign. They sign them electronically. Thankfully, we used to have people sign stacks of paper. We used to have to get in person and have them go through hundreds of pages and physically sign everything. E-signing has been a godsend. It's much easier to do. But what is the most important document in the initial disclosure package? That is the loan estimate, and that's what the first thing I point people towards, so that they understand the numbers and what the transaction is going to be. When we send out the closing disclosure package, again, there are several documents there, but the most important document is that closing disclosure. And so if anybody wants to learn more about these documents, certainly give me a call, let me know, and I can go through it. Or the next time you have a borrower that's ready to close, give me a call. I'll go through the closing disclosure with you, and you'll get a better idea of what we're looking for. So if anybody has any questions, feel free to call and or contact me. Otherwise, let's continue to get out those LEs and closing disclosures and close loans. Happy weekend to everybody, and hopefully I'll talk to you soon. Bye-bye.